And now I have with me the country's biggest banker, the State Bank of India Chairman, Mr. C. Setty. Mr. Setty, thank you very much for sparing time on a very busy day for you. Well, my first question to you is, do you see any big recovery in the market? The governor has actually pushed up the growth forecasts in the old series by 20 basis points. Are you getting a sense that we are on the throes of better growth?
First of all, thank you, Latha, for having me on your show. And the growth, upsizing the growth rate, as well as the fact that the governor has indicated, we are in a situation where very modest inflation backed by a good growth rate is a very good situation to be in. And the numbers, what RBI has also given in the last fortnight, indicates that the credit growth rate in the system is progressing well. And I think it's very positive feeling of what we are all getting in the economy.
Okay. He also did not give any relief to people who were expecting he will do a VRRR, a variable rate reverse repo. At the moment, the call rate and the TREPS rate is almost 1 percentage point below the repo rate. Any response to that?
So the governor was very clear that preemptive, he has used the word preemptive liquidity support will be given. I think I latch onto that word and would go by his promise that the sufficient liquidity will be there in the system. As we speak, liquidity is surplus by almost 3 lakh crore. And if that liquidity support is available, and which is required in this particular quarter, as you know, Q3 and Q4, generally the banking sector witnesses very good credit growth rates.
Yes.
And this time around, we are seeing continued credit growth rates which are robust in the system. So which means that sufficient liquidity support in the system is extremely critical. And the very fact that the governor really clearly mentioned that preemptive measures will be taken to provide liquidity is a very good positive development for us.
All right. The other thing that bankers wanted was that either the new LCR regime be advanced or that your CRR be counted for LCR, simply because some of the private banks don't even have any extra bonds to give it to the Reserve Bank for a repo. I mean, is that a disappointment that they have not allowed it to count your CRR towards LCR?
So the last CRR cut anyway was there, and we had got benefited. The full benefit of LCR cut was available by November end, right? So any measures in terms of LCR issues also on account of the ability of the system, going to our willingness to go to a high cost deposit is also pushing up. In the system, Latha, I don't know whether you applied your knowledge towards that. There's a lot of differential interest rate deposits happen in the system, the wholesale deposits, what we call.
Yeah.
And many of these deposits have high runoffs, while you pay higher rates, and the runoffs are higher. Yeah. Which means that you are spending on acquiring these deposits, but you are not getting the benefit of the LCR. And that is the conundrum many of the banks are facing. It's true. That is also one of the reasons why the banks are accessing the certificate of deposit market, because that would augment their LCR. So we will see, I think, if sufficient liquidity is provided. Yes, unsecured market is limited for the bank borrowings, but eventually the retail deposit mobilization is critical, and the banks have to definitely focus on retail deposit mobilization, while there are competing investment opportunities. But I think we can further strengthen engagement with our customers.
No, I agree. The tax is also not working in favor of term deposits vis-a-vis, say, equity mutual funds. I take a point on that. But the governor was very forgiving of high credit deposit ratio. He said, I don't care whether it's 80 or highest in many years, so long as banks maintain LCR. Does that come as a relief? Any reaction to that
Yeah.
statement?
In fact, this is something what I did mention earlier also, that
Yes.
I think undue focus on LDRs is not an appropriate one.
Okay.
Obviously, the banks, you did ask me in one of the interviews that whether there is a structural shift in the way the bank balance sheets will be funded. Yes, there will be a reversible structural shift. As the market instruments are gaining ground, the banks have to structure in a manner that you can't finance your asset side purely by deposits on the liability side.
Yeah.
Which means that while the fundamental requirement of the RBI would be that whether the bank has sufficient liquidity. As long as the liquidity is there, and where does this liquidity come from? I think we should be leaving to the bank boards and the management.
Okay, fair point, sir. You know, there is this very good, I don't know, depending on which side you are, that customers losing money on fraud up to 25,000 will be, compensated by the fund, and the banks will take 15% of the hit, and the borrower takes 15% of the hit. You see that as an extra expense coming your way? I mean, people could be gaming the system.
First of all, I would like to say that SBI always has been the customer side.
Okay.
So we are both on the same side, Latha. The customer protection for RBI for ages has been one of the major priorities, and particularly this governor has been giving a lot of importance in terms of customer service as well as customer protection.
Okay.
And as a lot of digitalization has happened and the payment systems have become very strong and people have started using, today almost 70 to 80% of our transactions happen digitally. And if you consider the whole alternate channel mechanism, if for a bank which has got 23,000 branches, even then 98% of the transactions happen outside the branches, which means that the customer protection becomes extremely vital. And in this process, while the digital adoption has increased, digital financial literacy is very weak.
Yeah.
In the process, I think one is the increased financial literacy on the digital front, and combined with some compensation mechanism, we have to see the guidelines, what eventually will come and what circumstances compensation has to be given. But I do not see it as a cost increasing measure, but I think it's more in terms of protecting our customers,
Okay.
and also increasing the responsibility of the whole financial ecosystem.
Okay.
To see that the customers are always protected.
Okay, thank you very much, Mr. Setty, for joining us in this very important monetary policy analysis show.
Thank you, Latha.